Hey guys, Dennis Tubbergen here with another economic update. Today is Monday, May 14th, 2018. I have on the screen today an article written by Ann Pettifor, who is the Director for Policy Research and Macroeconomics. This was just published, and the headline on Ann's article is, "Can we blame the bankers?" This really caught my eye. Ann was a speaker at a Rethinking Economics conference in Oslo last month, and she writes that she pointed out that Western politicians and economists are repeating the policy errors of the 1930s. I have said that repeatedly. In fact, the very premise of the new retirement rules book is that history repeats itself. Given the same sets of facts and circumstances, people tend to behave in the same way. And even more so, do groups of politicians tend to behave in a predictable way. That's what we're seeing now. So I couldn't agree with Ann more. Now, she said today that pattern of a global financial crash, which obviously occurred around the time of the financial crisis about 10 years ago, austerity, and a rise in political populism and authoritarianism is evident in both Europe and the U.S. And talk of war has risen to the top of the U.S. political agenda. Why have we not learned lessons from the past? Well, between 1929 and 1931, Ann writes, the losses from the U.S. stock market were estimated at $50 billion. It was the worst economic failure in the history of the international economy. Within 3 years of the crash, millions of Americans were unemployed. Farmers were caught between rising debts and deflating commodity prices, similar to what we're seeing today. And in Germany, between 1930 and 1932, Heinrich Brüning imposed a savage austerity program that led to high levels of unemployment and cuts in welfare programs. This in turn led to the demise of social democracy, the rise of fascism, and ultimately a global war. Now, here was the question that arose during this conference. Could bankers be blamed for the current period of financial crisis, austerity, political polarization, and the rise of fascism? Or should we blame the politicians? Well, Ann asserted that you should blame the bankers. Now, I would differ from her a little bit and say we blame both because the politicians allow the bankers to do what they're doing. However, she makes a rather remarkable statement here over the next couple paragraphs that I'll give you. After the financial crisis of 2007 to 2009, it was the finance sector that lobbied politicians into bailing out the private financial system. The system was on the brink of collapse with a very real threat that hundreds of millions of deposit holders would not be able to withdraw funds from their banks in the event of systemic failure. Bailouts of individual banks were both inevitable and, given the circumstances, right. After the Fed bailout, Wall Street bullied and blackmailed the U.S. Congress and demanded a further $700 billion in bailout funds to rescue Wall Street from its own chicanery and greed, to quote Matt Tabai. Now, Matt Tabai is one of my favorite reporters, and he says this: one meeting to discuss the original bailout bill at 11 a.m. on September 18, 2008, Henry Paulson, ex-CEO of Goldman Sachs and 74th U.S. Secretary of the Treasury, actually told members of Congress that $5.5 trillion in wealth would disappear by 2 p.m. that day unless the government took immediate action, and the world economy would collapse within 24 hours. When Paulson spoke, politicians deliberated, money markets froze, and stock markets fell like a stone. Soon after, however, politicians agreed to the $700 billion bailout and the markets recovered. Now, bottom line is this: when you take a look at what banks give to politicians, it becomes very clear as to why we are where we are. According to Reuters, the financial sector spent $2 billion on political activity from the beginning of 2015 to the end of 2016. That, incidentally, exactly coincides with the election season. Of that $2 billion, $1.2 billion was campaign contributions. That's more than twice the amount given by any other business sector, and that works out to $3.7 million per member of Congress. That frankly, is remarkable. Now, as I write, as Ann writes here, bankers continue anger and resistance. The biggest U.S. banks made $2.5 billion from Trump's tax law in one quarter. After the law was passed, Gary D. Cohn, CEO of Goldman Sachs, resigned as advisor to President Trump. Does that mean he got done what he needed to get done? So, Ann repeats the point. Global bankers and financiers can be blamed for the rise of populist and fascist political parties after the great financial crisis. And given their determination to evade democratic regulatory oversight and management of the global financial system, we can expect bankers and financiers to be responsible for the next catastrophic economic failure. I happen to agree with most of what Ann says here. I think that if we want to avoid another economic catastrophe, which incidentally is probably a little bit too late to do, we need to go back to a sound money system. Make bankers play by the same reserving rules as insurance companies and money market funds have to play too. They have to reserve 100% or more of finances. Bankers have to reserve just 10%. We could also have sound money, and that would firm up the financial system. And by sound money, I mean a link between currency and a precious metal like we've had for so much of history. That's my take. That's today's economic update. I'm Dennis Tubbergen.